in your accounts paper 1, you're going to be having one topic of departmental accounts. There, whatever you will be doing, okay, what I am doing, this is father and mother of all those particular things, okay. In final CA, we'll try to research this particular subject slightly better, okay. But listen to whatever I will be saying. See, till now in whatever questions you did, wherever you prepared process 1, process 2 and process 3 account. Can you say process 1 always transferred the goods to process 2, no?
Yes.
And we always transferred at cost. We always transferred at cost. Sir, why do we transfer at cost? It's very simple. One department of one company has to transfer the goods to another department of the same company, always at cost only, no? You cannot make profit by selling to yourself, no, in life.
Yes, sir.
Example, can I ever have this kind of a strategy in my life? Abhi, I have a house, I sold it to my father for 3 crores. He sold the same house to me at 4 crores. He became richer by 1 crore. I sold the same house again to him at 5 crores. I'll become rich by 1 crore. Can this happen? We both will become beggars in end by paying the stamp duty, no?
Yes.
Correct, no? Okay, you don't become rich by selling to yourself, boss. One department of one company transfer something to the other department of the same company. Obviously, you will transfer at cost only. That is why, no, all the processes are usually called as cost centers. Okay, cost centers means they are responsible for accumulation of cost. In final CNO, this subject is called as strategic cost management and performance evaluation. Okay, so luck by chance, I have the books of that particular thing also. Strategic cost management and performance evaluation. Now, one of the things in every corporate you all should know, and what is that? Whenever anybody works in an organization, we should be able to see how good or bad this guy works. Based upon the performance that a manager gives, we usually have a bonus or a penalty for him. Okay, this is called as performance evaluation. Now, your process 1, your process 2, your process 3, all of them are cost centers. All of them are cost centers. How do I judge them? In reality, how are cost centers judged? Means, how is the performance of cost centers judged? In reality, there is a system, something called as standard cost. Now, what happens over there? For every department, we set standard cost. Example, for my first department, I told them standard cost per unit of the product should be 10. For the second department, I told it should be 15. To the third department's manager, I told it should be 25. These are the standard cost. At the end of the period, I'll start to get actual cost based upon whatever those guys have incurred and produced. Suppose actual cost per unit was 9, actual cost per unit was 16, actual cost per unit was, say, in this case, 25 only. Tell me one thing, cost was supposed to be 10 for department 1, but it was actually 9. Is this good or is this bad? It is good. Somebody can be saying, sir, cost is less, sir, very good. But then there is the other side also. To save the cost, he might have used some cheaper quality of material. It can happen, no?
Yes.
It can happen. 15 should have been the cost. It was 16. Usually we'll say you have incurred extra, you are bad. Okay. But then we can be saying that it could have happened that he used better materials, workers took more time and produced a better product. And in end, we could sell the product at a higher price. So it was more profitable for the company. You understood this?
Yes.
You incurred ₹1 more as cost, but then you might have got more amount of revenue. Okay. So therefore, we always say this. If you start to judge departments based upon the cost, mostly every manager will have an aim in life that I want to be reducing my cost. Now that reduces the quality of the product also. And then businesses don't grow. See, the funda in today's business is that you have to spend to expand the business. You cannot start to be thinking like a miser that We have to be saving cost on every front. That doesn't happen. Okay, businesses will not grow like this. Okay. So then we always thought cost is not the correct basis to be judging. Okay, cost is not the correct basis to be judging. Then what is the correct basis to be judging? So therefore we thought, let's convert these factories into profit centers. Profit centers means I will judge you based upon the profits. But then for profits, we require two things in life. Tell me which two things?
Revenue and cost.
Revenue and cost. Now, process one manager. Suppose he produced the product at 10. Okay. He produced the product, it costed him 10. So this is his cost. And whenever he will transfer to process 2, if he will transfer at 10 rupees only, can we say profit will always become 0 only, no? Because you are incurring cost and you are transferring at cost only. So therefore profit will become 0. Okay. So therefore we always had a notion, let's try to be changing this. Hence a new funda came in this world. That's a very huge concept. Obviously I cannot try to teach you at this particular level. You are too small for it. Called as a concept of transfer pricing. Transfer pricing means what? Transfer pricing means one department will produce something, but whenever has to transfer to the next department, no, they will not transfer at cost. They will transfer at a markup price agreed between both of them. Suppose 10 rupees is a cost, okay, but department 1 tells to department 2, whenever I'll transfer, you know, I'll transfer you at the rate of rupees 12. Okay, this 12 is popularly called as transfer price. It is kind of selling price, but it is the selling price between two departments. It's the internal price. You all understood my language?
Yes.
So therefore, first department will generate a profit of how much rupees here? 2. Now the advantage of this, now I'll tell every manager, I will judge you based upon the profit that you all generate in this year. And obviously for increasing the profit, there are only two ways here. You increase the sales or you decrease the cost. In any case, we were trying to decrease the cost when it was cost centers also. You all understood what I'm saying?
Yes.
But now our focus will start to be shifting. Sir, let's try to increase the sales also, sir. Let's try to be producing more. Okay. And if we will produce more, we will transfer more to the next particular department. We'll start to be getting more amount of profit. Companies will start to be producing more. They will start to use their labor in a better way. They will start to make them more efficient. They will try to tell them, boss, try to produce as many goods as possible. Okay. Because for every unit, we make a profit of rupees 2. So therefore, no, these small departments start to think like an organization. Okay. And ultimately, this is a better center as compared to cost centers. In future, we are going to be doing investment centers also, but that is left upon for final CA. Okay. And for profit centers also, I've told you all very small things as such. Okay. But this particular price is going to be called as transfer price. But for this, no, one thing always do remember, two departments have to sit down and agree at a price, because obviously, can we say selling price for one department? Can you tell me the next line? Will become cost for the next department. So therefore, there are a hell lot of fights that keep on happening. Okay, why? Because first department would like to push the price as high as possible, but second department would like to have cost as low as possible, no?
Yes, sir.
Okay, so therefore, in real life, no, transfer price to set is a very complicated process. Again, I should not be saying it, but I'm saying it for the third or fourth time. How to set the transfer prices, no, okay, and what are the fights that happen, all those particular things we all have in our final CA portion. But at least for your process costing, no, those guys will give you this particular thing, and we all can try to be working around with that particular thing only. They will not give you like, you know, that we all are fighting ye wo vagera. So in your CA inter, they'll give you that particular price. Okay. So now our focus is changing from from cost centers to profit centers. Okay. Now, but then do remember, even when it becomes profit centers, no, at the end of every year, companies will have to be preparing their balance sheets also. Balance sheets are not prepared for every department. They are prepared for the company. Company would also prepare its P&L account, whereby companies should try to get the profit. Okay. So I'm bringing out a situation like this. Okay. Listen. Today, my only aim is to try to demonstrate this example to you. Okay. Listen. I'll not be able to do that question. That question will reserve for tomorrow. But listen now. Keep your calcies with you. I will require the calcies, please. Okay, wherever I ask you some numbers, ensure that you compute those numbers and try to tell it to me. Okay. Cost, quantity per unit. Okay. Listen. Now, in this case, no. First, in my example, there are only two processes. P1 transfers to P2. P2 transfers to finished goods. If this question will come no in exams, it will directly come for 16 marks. Okay, it has come around 5 to 6 times. Okay, in last 30 years or so. Okay, so it can be coming, but if it comes, because these questions take lot amount of time to be doing, they'll come around for 16 marks. Process 1 incurred in this case rupees 1000 to produce 100 units of the product. Okay, so therefore per unit cost was how much? 10 bucks. Okay. So cost in this particular case was 1000, quantity in this particular case was 100, so per unit was 10. Now when they produce this particular thing, no, okay, can we say if they have produced 100 units, they should transfer 100 units to the next particular process, no?
Yes, sir.
But they did not. For some reason they wanted to have a stock. So therefore less closing stock of process 1. Out of 100 units, 25 units they kept with themselves. Okay. So can we say this is closing stock of process 1? Do remember, everybody in this world will value the stock at their cost. Is that all okay?
Yes, sir.
Tell me one thing, what is the cost per unit of process 1? 10. So therefore 25 units will get valued at what particular rate? 250. Can we say remaining 75 and 750 over here, this represents cost of goods transferred to the next process? Is that all okay?
Yes, sir.
Okay. Now, whenever first department will transfer the goods to the next department, no, they no longer transfer at cost. They'll transfer at a markup price. That markup price is going to be called as transfer price. For that, markups have to be decided by agreement between both the departments. So, first department in this particular case had spoken to the second department and they all agreed at this particular thing. That markup that will be done will be nothing but 1/4 of transfer price. Speak, it will be how much? 1/4 of transfer price. Can we say once I take this and once I add up this, cost plus markup will give you the selling price. Can we say selling price is nothing but the transfer price, no?
Yes, sir.
Okay, so therefore I am writing over here, this is transfer price for P1. Can you say transfer price for P1 starts to become cost for P2, no?
Yes, sir.
Okay. So now you all understand mathematics quite good. Can we say 1/4 of transfer price will also mean 1/3 of cost, no?
Yes, sir.
Okay. So therefore 750 into 1/3 will become how much here? 250. So therefore first division transferred the goods to the second division at rupees 1000. Tell me, 1000 is a transfer price for transferring how many units? 75. Now see, when I am teaching you this, no, I have two other aims. I have two other aims as such. What are those two other aims? First, at the end of the year, no, we got to be making balance sheet of the entire company. So therefore, my balance sheet will start to come into picture. Second, obviously, we got to be making profit and loss account of the company. Okay. So therefore, I want to be doing these particular things. But then do remember, this is balance sheet of the company, not of the department. This is costing P&L account of the company, not of the department. Okay. So, in balance sheet, somewhere or the other, can we say on asset side, stocks will also be coming?
Yes.
Okay. I was the main accounts head of this particular company. Okay, main accounts head. I asked to my process 1 manager, do you have stock? Because I'll have to be writing the stocks. I asked him, do you have stock? Tell me, he'll say yes or no?
Yes.
Yes.
Yes, sir.
Of how many units he has?
25.
25. Can we say this stock of his is WIP stock for the company, no?
Yes, sir.
Okay. So therefore, I'm writing over here WIP 1. Okay. This is WIP 1. WIP of department 1. I asked him, how much stock do you have? He told me 25 units. I asked him, please tell me the value of it. He told me the value of it is 250 rupees. Then I thought, and answer me this. Is this 250 rupees at cost to department 1? Tell me yes or no.
Yes, sir.
Yes. But now most important question. Is it at cost to the company also? Yes or no? Obviously yes, because this is the first department. But the first department has not purchased anything from some other department because it is the first department. You all understood this?
Yes, sir.
Everybody?
Yes, sir.
So therefore this 250 is our final figure in any particular case. Okay, this 250 is at cost to process 1. But it is at cost to the company also because I'm making balance sheet of the company. So I got to be valuing all the stocks at cost to the company, boss. Okay. This is balance sheet of the company. So obviously stocks will be coming at cost to the company. But then cost of department 1 is also cost of the company, no?
Yes, sir.
Okay. Job done. Second. I am trying to be making P&L account of the company also. Can we say profit and loss account of the company should give me profit and loss account of the entire company? But profit of the entire company in this particular case will be sum of the profits of each department, no?
Yes.
Beta, departments form the company na yaar. So therefore, in this case, tell me how much profit department 1 has earned till now? 250 when it transferred the goods to the next department. So therefore, I'm writing over here by process 1. So therefore, department 1 has earned a profit of 250. Okay. Till now, any doubt? Because this is simple. It's about to become quite complicated now. Is this okay?
Yes, sir. Yes.
Okay. Now see. Now the things will be changing. Solid they will be changing. Listen. Second department starts from here. Okay. Second department got goods. For them, the cost was 1000. Now they will incur more cost also, no, to complete the product further. So therefore, add cost incurred by process 2 more. That was suppose 500 rupees. So therefore, totally 1500 is the cost for how many units here? 75. Just divide, please. You tell me the per unit figure. 20 rupees. Okay. This is total cost of process 1 for 75 units. They had to be transferring these particular goods to the finished goods department. But for some reason, they thought they want to be keeping 25 units as stock. Okay. So therefore, out of 75, 25 units they are keeping at stock. Okay. Now, stock has to be valued. Everybody values the stock at their own cost. This is stock of process 2. Stock of process 2 will be valued at cost to process 2. So tell me, what is the cost of process 2 per unit? 20. So take your calci, 25 units at the rate of 20. This figure will be how much? 500. Okay, this will be closing stock over here. So therefore, 50 units in this particular case, we have transferred to our next department. This particular figure will be nothing but 1000 over here. Okay. Now, this particular figure will be 1000. Now, listen. This is cost of goods transferred to the next particular department. We have transferred 50 units to the next particular department. Okay. Whenever we will transfer, we will also charge our markup here. Now, the moment we all do that particular thing, can we say this will give me transfer price for P1, sorry, for P2 department? That's okay?
Yes, sir.
But transfer price for P2 will be nothing but cost of finished goods department, no?
Yes.
From P1, goods go to P2. From P2, they go to finished goods. Now, the transfer price that was agreed over here was 1/3 of transfer price. Tell me one thing, 1/3 of transfer price will also be half of cost. So therefore, half of cost will be 500 over here. So therefore, this particular figure will be nothing but 1500. Can we say 1500 is the total transfer price for transferring how many units here? 50 units.
50.
So till now I've completed process 1, I've completed process 2. Let me get back to the other objectives of the question. Sir, I want to be making balance sheet of the company. Okay, I was the chief accountant. So at the end of the year, I got to be making my balance sheet also. I asked process 2 manager, do you have stock? Tell me, he'll reply yes or no? Yes. He has stock of 25 units. I asked him 25 units is okay. Please tell me the value for it. Can we say process 2 manager would have valued this particular thing at the rate of rupees 20 that was cost for him. So therefore, can we say his stock is of rupees 500, no?
Yes, sir.
Okay, now I'm asking you 2 questions. Is this 500 at cost to process 2? Reply me yes or no. Yes, everybody values the stock at their cost. Department 2 valued the stock at their cost. Okay, first job done. Second job. Tell me one thing in this particular case, that is it at cost to the company also? No.
Sir.
Can we say 500 is actually part, 500 is actually part of 1500, and 1500 itself includes the profit of 250 that was earned by department 1 when it transferred the goods to department 2.
Yes.
Beta, your stock includes your department's profit also. So therefore it is not at cost, no?
Yes, sir.
You all understand this?
Yes, sir. Yes.
Okay. So in this case, no. This 500 is at cost to department 2, but it is not at cost to the company. So therefore what to do? You try to find out in 500 how much is the profit of department 1, and that is simplest thing for me to be doing. Can we say 500 is part of 1500? Yes or no? And can we say 500, and can we say 1500 itself has 250 rupees of profit of department 1 only, no?
Yes.
So if 1500 has a profit of 250, 500 has a profit of how much? Cross multiply, compute. Cross multiply, compute. 83.33. I'll take that particular thing as 83. Now what is 83? Can you say 83 in your and my local language? It should be, it is that part of profit of department 1 which is there inside closing stock of department 2, no?
Yes.
You understood my long sentence? It is, repeat, it is profit of department 1 which is there inside closing stock of department 2. Can we say this 83 rupees will have to be reduced from here, no?
Yes.
Because we want to be valuing stocks at cost to the company. But 500 has our company's profit of 83 inside it. So therefore, I'll have to try to remove it, right? Makes sense?
Yes.
Makes sense. So therefore, this particular figure is 417. Now this 83 rupees, no? People call it by funny names. Some people call it as stock reserve. Okay, in your departmental accounts, which is there in F5 BCom also, I think. You might start to be calling that particular thing as stock reserve. I don't understand all these heavy duty words or something which have been created by some ridiculous people. But then I do understand what is 83. Can we say 83 rupees is that profit which was realized by department 1 but was not realized by the company? One sec. Can we say departments make a profit when they produce and transfer to the next department? Is this line fair?
Yes, sir.
But can we say this is P&L account of the company? Can we say company will only make the profit when it will sell to the outsiders? No.
Yes, sir.
Can we say 83 rupees of profit will not get realized in this year because that profit is stuck inside my stock? No.
Yes, sir.
So therefore this 83 bucks will always have two effects. First, we have to reduce it from stock so that I arrive at cost to the company. And second, in this particular case, I'll have to debit it to my costing profit and loss account. You all can call this particular thing as unrealized profit also. I'm okay. If this word seems to be too stupid, then you can use your accounting words, okay, that anybody might be using. This is stock reserve 83. Now, if you think, no, this account has started to make sense to me. Tell me one thing, this is costing P&L account of company. Can we say till now you credited 250 rupees to this particular account, thinking that company has made 250 rupees of profit. That is why you credited it, no? If you all remember, I told you all one line, profit of the company will be some of the profits of the departments, no? But out of 250 now, 83 rupees will not get realized by the company because it is stuck inside the stock, no?
Yes, sir.
So therefore, I debit it. So therefore, if you see till now, the status of my costing profit and loss account, can we say till now 167 of realized profit is there, no? Till now.
Yes, sir.
And this same 167, no, is also visible in my statement also over here. Out of 250, 83 got stuck over here. So can we say 167 is traveling down, no?
Yes, sir.
Now see, my next sentence. Listen very carefully. My process 1 is done. My process 2 is done. Process 2 manager, I asked, do you have stock? He said yes. I asked him how much? He said 500. But then I calculated out of 500, 83 rupees is our profit only, which is stuck inside that rupees 500. So therefore I reduced that. Okay. Now second thing, I'm also making costing profit and loss account of the company here. Can we say profit and loss account of the company will be sum of the profits which are earned by the departments? Now departments in this particular case, can we say department 2 has earned a profit of rupees 500, no? Department 2 made a profit of 500 when it transferred to department of finished goods, no?
Yes, sir.
Now profit of the company should be sum of the profits of the department. So therefore in this particular case, I'm going to be writing over here by process 2. So therefore I'm writing over here by process 2. So department 2 has earned a profit of rupees 500. Okay. Now whatever I have written till now over here, okay, I also have almost over here 167 and I'm writing 500 more over here. Basically in red, no, I'm writing our own profits over here. I'm trying to be writing the profits which are earned by the departments and the profits which are stuck up. Okay, so therefore 667. You all will understand this 667 is the same figure which is appearing till now in my costing P&L account, no? If I do this plus this minus this, I'll be arriving at 667, no?
Yes, sir.
Okay. Now this is the last thing. Just pay attention, it'll all get over. Listen. So now you are finished goods department. Tell me how many quantity of units you got from process 2? Tell me the quantity. 50. Can we say it costed you rupees 1500?
Yes, sir.
Okay. So can we say per unit cost is going to be how much? 30. Now you are going to be selling these particular units in the market. Okay. Out of 50, you could sell 40. So can we say you will have a closing stock of 10 units now over here?
Yes.
So therefore I'm writing less closing stock of finished goods. How many units? 10 units. Can we say 10 units will be valued at your cost? Tell me what is your cost, beta? 300. So at the rate of 30 per unit. So therefore, can we say in your and my language of cost sheet, this will represent cost of goods sold, no?
Yes, sir.
Okay. So how many units we all have sold? 40. Can we say its cost is how much? 1200. Is that all fine? I'm reaching to the end of this particular question. So now I want good participation from everybody. Do not be silent when you have to speak. Speak. Tell me one thing. These 40 units we must have sold in the market, no?
Yes, sir.
Okay. Whenever we sold, no, our selling price was 50 rupees. We sold 40 units. So can we say company did a sales of rupees 2000? That's okay. And finally, it earned a profit of rupees 800, assuming there were no selling expenses, there was no general admin or something. Okay, so therefore, this is the final thing. Okay, now see, brilliant stuff this is. I was the head of the accounts department, you are finished goods department. Okay, I asked you, do you have stock with you? Tell me, will you reply yes or no?
Yes, sir.
Yes. So, can we say that stock is finished goods stock, no, for us? Okay. I asked you, how many units you have? Tell me what the hell you will reply?
10.
10. I asked, you tell me the cost, no yaar. So, therefore, you will tell me a cost of how much? 300. Now, I'm asking you two questions, like always. Is this 300 at cost to the finished goods department? Yes, obviously. Everybody values the stock at their cost. Finished goods department have valued the stock at their cost. Their cost was 30 rupees. Okay. This answer will always be yes only. Everybody values the stock at their cost. No. But tell me one thing, this is balance sheet of whom? Company. So I have to ask you all the next question. Is it at cost to the company? No. Tell me one thing. In this 300, whose profit is there? Department 1 and 2 both, no?
Yes, sir.
Obviously, till the time goods have come to finished goods department, everybody had their markups here. Okay, so therefore everybody has their profits. Okay. So in 300, how much is a profit? That's very easy. Can we say 300 is part of 1500? 1500 has a profit of 667 of department 1 and department 2, no? Inclusive.
Yes, sir.
So therefore 300 will have how much? Please cross multiply and tell me. 133. I'll take that as 133. Okay. Now see, 133 will have two effects. In accounting language, you call this 133 as what, beta? Stock reserve. All nonsense words. That's okay. So therefore, this is stock reserve. 133. Now this 133, if I'll reduce, can you say 167 is the value of finished goods department from the viewpoint of the company, no?
Yes, sir.
Because I remove the profits that our departments have earned in middle. Is that okay?
Yes, sir.
Okay, further. But 133 should always have two effects. One, it should be coming over here because I want to be removing the profits earned by my department so that I can try to value stocks at cost to the company. But then there should be one other effect of 133. What is that other effect? Debit to costing profit and loss account. But when you debit it to costing profit and loss account, now my intention is slightly different. Till now, before writing this particular thing, can we say in costing P&L account, there was a net figure of 667? I was thinking that company will make a profit of 667 rupees. But now out of 667, can we say 133 again will not be earned by the company because this 133 rupees is stuck inside the closing stock of process 2, no?
Yes, sir.
So therefore, can we say the net figure till now will be nothing but 534. You subtract these two, no, please. 667 minus 133, that will be nothing but 534. Is that all fine? Job done. Sir, what about this 800? You all will understand. 800 rupees is realized by the company, no?
Yes,
Beta, this is sold to the customers only, no, in end. So therefore, it is realized only here. Okay. So therefore, I have two ways of writing 800. If you remember our yesterday's question number 2, if you all remember, can we say on credit side, we write down sales, no?
Yes.
Costing P&L account, we write down sales, no, on the credit side. So therefore, sales was 2000. And on the debit side, we were writing what? You tell me. Cost of sales, no? Cost of sales, no, yesterday.
Yes, sir.
Cost of sales in this particular case is 1200. Everybody, do you all agree at one thing that this 800 is realized by the company because it is sold to the external customers? No.
Yes, sir.
My job is done. If somebody will ever ask me, what is the profit that the company has earned? If somebody will ever ask me, what is the profit that company has earned? Can we say it will be 1334, no?
Yes,
Because whenever the profit was not realized, I went on reducing those particular things. So therefore, left is a profit that is realized no by the company.
Yes, sir.
Now, ICAI makes this column, okay. But if somebody wanted, say, a better knowledge, I made exactly the same particular thing, but by making costing profit and loss account. Obviously, this particular figure will be 1334. This is the profit of the company. Popularly, this is also called as realized profit. This is a profit that the company has realized. Is this all okay?
Yes, sir.
My two objectives are done. Two objectives. First, I had to be finding out the profit of the company. So therefore, profit of the company is 1334. That is the realized profit. And one other thing also. What is that other thing? This particular thing in this case is nothing but value of the stocks from viewpoint of the company. Is that all fine?
Yes.
So my balance sheet is taken care of. My costing profit and loss account is also taken care of. Few words I am saying just to try to conclude this particular thing. These figures know 83 and 133. These are closing stock reserves of this year because they are out of the closing stocks. These are closing stock reserves. If you all will understand, no, why do stock reserves come? Why do stock reserves come? See, this is my own logic. Stock reserves come only because of one thing, because there is a difference between production and sales. Think this bit deeply. Stock reserves only come because there is a difference between production and sales, no? What happened was, production happened in this year, therefore, departments produced in this year. When they produced and they transferred, they got a profit, no? But companies could not sell. So therefore, production happened, but sales did not happen. That is why there will be a stock reserve, no?
Yes, sir.
If suppose companies produce the goods in that period, sorry, I'll repeat the sentence. If suppose departments produce the goods in this particular period, and company could also sell the goods in this particular period, stock reserves will not even come also, no, because then profit is realized by everybody.
Yes, sir.
So in my slightly better English, I say stock reserves come because of timing differences. Departments produced in this year and therefore they got the profit in this year. But companies could not sell in this year, so therefore profit was not realized. Therefore, to try to find out realized profit, you will subtract unrealized profit.
Yes, sir.
You all understood that stock reserve is unrealized profit?
Yes, sir. Yes, sir.
Okay, then I'll conclude this thing. This year, we are debiting closing stock reserves. If I will make costing profit and loss account of the next year, if I will make costing profit and loss account of the next year, these closing stock reserves in the next year, I will credit as opening stock reserves of the next year. Somebody can ask why. Somebody can ask why. Please ask why. Why? Because this year we debited them because company could not sell this product. Next year, I open my P&L account with the assumption that these stocks will get sold and therefore this profit will get realized. Somebody says, sir, even if in the next year they are not sold, okay, I will again start to make the closing stock reserves in the next year, no?
Yes, sir.
And this system will keep on continuing each and every year as such. Okay. You all will understand next year I am crediting them because I will start to be thinking that companies will realize this. Obviously, departments realized this particular profit in the last year when they produced and transfer.
Yes, sir.
Are dumb people, you understand something? Okay, dumb people, you understand something? Okay, thank you. So next year in this particular case, these stocks, okay, will ultimately get sold and company will realize. In case they are not sold, then in that particular case, like, you know, we will again start to be having the closing stock reserves. So every year, closing stock reserves of 1 year will become opening stock reserves of the next year. This particular thing will keep on continuing. That's it. It is all over. Okay. Now what you all are doing for me, okay, we are not solving the next question. But what you all are doing for me, question number 9 you all write down. So therefore in the next lecture we all will directly start with the things. You all write down. In the books of A Limited, this is the data for October. Write down process 1 account. Write down cost, profit, amount. We are going to be making the account in a vertical manner, approximately for half a side. Again, process 2, approximately for half a side. Cost, profit, amount. Process 3, again for half a side. Cost, profit, amount. Make these accounts for half a side. So accounts means in a vertical manner like this. That will be enough for us. A Limited produces product X, which passes through 2 processes before it is completed and transferred to finished stock. The following data relates to October. Process 1, process 2, finished stock. We have opening stock. Okay. We have direct materials, we have direct labor, we have factory overheads, closing stock. Inter-process profit included in opening stock. Inter-process means stock reserve. Obviously for process 1, stock reserve cannot be there. You all understand that why? Because process 1 is a starting process. It is not purchasing anything from some other department. So therefore in its stocks, there cannot be any unrealized profit here. Okay. Because it's the starting one. Obviously, in process 2's opening stock, how much stock reserve is there? 1500. And in finished goods, it is 8250. Now, tell me whatever I had asked you all yesterday. Now, this particular profit of 1500, what is written over here? Inter-process profit included in opening stock. Okay, tell me this 1500 actually would have been earned by which particular department?
Process 1. Process 1.
Process 1, when it must have transferred the goods to process 2. In same way, this 8250 must have been earned by, be careful, process 1 and process 2, because in finished goods stocks, you will be having both the departments, no, whose profit will be coming. Now see, output of process 1 is transferred to process 2 at 25% profit on transfer price. You all can write down over here, 25% means 1/4 of TP. That is nothing but 1/4 on cost. Sorry, that is nothing but 1/3 on cost. Further, output of process 2 is transferred to finished goods at 20% profit on transfer price. So 20% represents how much? 20 is 1/5, no? So it is 1/5 of TP. So therefore it will become 1/4 of cost. Now, one thing that is too important for me, and that is this particular line that I am reading right now, that is stocks in process. Stocks in process means WIP stock are valued at prime cost. I'll come back to this line in some time. Okay. Now, this line, whether they give or don't give, it doesn't matter. Finished good stock is valued at the price at which it is received from process 2. One sec. Even in our yesterday's example, if you all remember, I'd asked this question around 3 to 4 times. Every department values the stock at their cost. Can we say cost of finished goods is nothing but the sales price of the P2 department, no?
Yes, sir.
So that is whatever this line is trying to tell you. Finished stock is valued at a price at which it is received from process 2. Even if this line is not given, obviously cost of finished goods is nothing but the sale of P2 department. Sales during the year are 1,40,000. You are required to prepare process cost accounts and finished goods account or trading account showing the profit element at each stage. Also find out the realized profit and show stock valuation for balance sheet purpose. Now yesterday I done all these three things. Prepare process cost accounts. In this statement, actually this was kind of process 1, this was kind of process 2, and this was kind of process 3. I done that, but we'll give that particular thing an account format. Okay, that was one thing. Then realized profit I got for you all through costing P&L account, and in case you don't want to be doing that, then I had done exactly the same thing in red also. Okay. And then in this particular case, we have our balance sheet also. So I had done all the three things in my yesterday's example, but we are going to be doing all those particular three things based upon this particular question as such. Okay, so let's start. Now see, only that line that is new for us. Stocks in process are valued at prime cost. Okay. Now, if I try to talk of normal cost sheet for you all, normal cost sheet that you all have done. Okay. What you all did with me. Direct material, direct labor, direct expenses, prime cost, add factory overheads, okay. Then comes gross factory cost. After that, in this particular case, your WIP stock will start to come over here, okay. This will start to give you net factory cost, okay. Now, if I let the cost sheet remain like this only, can we say WIP stocks come over here? They will get valued at cost. Tell me in cost, which all ingredients of cost will come? This was done right on the first day of the lectures. WIP stock will get valued at cost. In cost, which all cost will come? Tell me the name of the expenses, no? Direct material, direct labor, direct expenses, and factory overhead. So therefore 4 costs will come here. You have written these particular things. Okay, so therefore these particular 4 costs will come. But see, now there is a line over here that tells you stocks in process are valued at prime cost. If stocks in process are valued at prime cost, so can we say in stocks factory overhead should not come, no?
Yes, sir.
Because stocks in process means WIP stocks have to get valued at prime cost. So I'll only do one small thing. This factory overheads from here I have removed and I'll transfer that factory overheads over here. Is that all okay? If I will be doing that particular thing, now you all tell me based upon this new thing, WIP stock will get valued at cost. But tell me in cost, only which cost will come? Direct material, direct labor, direct expenses. So can we say only prime cost items will come, no?
Yes, sir.
So in this question, this will be the format as such, okay, because factory overheads should not go inside WIP stock. It is because of the instructions given to you in the question, okay. So that is one thing that you will have to try to remember, okay, that is one thing. Listen. Now, first thing, second. Tell me one thing in this entire question, it's a small question, okay, answer is big but the question is small. Tell me, do you have any quantities with you? No. So I'm not preparing that quantity column. Only thing that I'm trying to be preparing is amount column. Okay, please just hold on, don't write anything. So therefore, I'm trying to prepare process 1 account, only amount column because the quantities are no longer there also. Can you say there is no normal loss, abnormal loss or abnormal gain? All those words are also not there. Quantities are also not there. That's okay for everybody?
Yes, sir.
So even like, those particular concepts will not be coming. Now what I am doing, with this amount, I am trying to be preparing 2 other columns and that is cost and profit. In profit, all those stock reserves I will start to be writing. Okay. My only purpose of doing this particular thing is one only, that is I am not preparing working notes for calculation of stock reserve. It will come in my account only. Okay. So this is the only column that should be prepared. I am preparing 2 other columns, cost and profit. Now see, this is amount. This is the only column that should come. But what I am doing, if any department makes any profit in middle, no, that I will write over here. So therefore, this will be profit of any department. Okay. If any department makes any profit over here, that I'll put over here. Can we say if from here I subtract this particular thing, I will arrive at cost to the company, no?
Yes.
If our own department's profit, I start to remove from the stocks and so on. So therefore, I'll arrive at cost to the company. Okay. So therefore, these will be our columns as such. Okay. Cost to the company, profit of any department. And this will be in any case a column that I'm going to be preparing. So I want a format like this. Now to make a format like this, no, you will mess it up. So therefore, what I am doing? I am doing exactly this particular thing only, but I am preparing it in a vertical manner. Okay. So vertical manner means in this particular case, I'm trying to prepare it like passbook. You all have seen a passbook ever in life?
Yes.
So like, you know, to buy all those particular things, I'm not making a debit side or a credit side. All the particulars will come in one single go only. Okay. And that is what yesterday you all did also. Okay. So therefore, process one account. You all do one small thing. You all write down cost of the company, profit of any department, and against amount, in case you all want, you can write down financial column. Okay, so we are still preparing the accounts only, boss. It is still your account. So therefore, you all can write down process one account only. But we are trying to be doing that in this particular manner. Okay. So let's start. Now see, in any usual question, no, till now we all have not actually done a usual question. WIP account should always start with opening stock of WIPR. That is common sense. Then all your expenses should be coming material, labor and factory overheads. Till now, I did not have a chance to tell you because there was no stocks in the questions. Okay. But now there is. So, to opening stock. Okay. Then material, labor and factory overheads. Okay. Obviously from here you will transfer something to process 2 and this will be nothing but closing stock over here. One extra thing now. Whenever P1 will transfer to P2, no, they will not transfer at cost. They will transfer at a markup price. So P1 will be making a profit because now will be a profit center. All these words are okay for you?
Yes, sir.
Okay. So therefore on debit side there will be profit. That profit will be getting transferred to costing profit and loss account. Okay. This only I am doing. It's only that to make it slightly more neater, I'm trying to do the things in this particular format. That's it. Else it is actually the same particular thing only. So let us start now. So first of all, in this case, 2, write down opening stock. Now, process 1 opening stock is 7,500. Tell me, in 7,500, can there be profit of any department?
No, sir.
No,
sir.
because that's a first department. So nil, cost to the company will also be 7,500. Then, after opening stock, I got to be writing. Just a sec, I'll delete this page. After opening stock, I got to be writing material, labor and factory overheads. Although I'm writing material and labor, factory overheads, I'll tell you. So therefore, to material, to labor. Material 15,000. Do remember, this much amount of material, no boss, we are purchasing from outside. You cannot have profit of any department in this year. This is our cost as such. So therefore 15,000. In that there is no profit of any department as such. This much we are incurring. Okay, this is your cost here that you are incurring. Further, labor. Labor is 11,200. 11,200. Now see, honestly I should write down factory overheads, but problem had told me that stocks in process are valued at prime cost. So therefore what I will be doing, this line was there, no? So stocks in process are valued at prime cost. So therefore in my stock factory overhead should not go. So what I am doing first, you all do total of these 3 numbers. You tell me the total.
33,700.
33,700. Now 33,700. Okay. I am reducing closing stock first. I am writing over here by closing stock. Everybody will tell me this. Why I have not written factory overheads till now? Because stocks in process are to be valued at prime cost. So therefore, if I'll write factory overheads, so therefore then those factory overheads will go inside the closing stock. That will become against the question. Okay, so therefore, first you deduct your closing stock. No, so that is what we are going to be doing. Closing stock 3,700. Obviously, that also cannot have any profit. You reduce anything, put it up in brackets. In exam, you will start to add it. So therefore, this is 30,000. Now, can we say this much opening stock, incomplete goods we had? This much cost you incurred more. This much closing stock you have with you. Can you say remaining goods you must have transferred to the next process, no?
Yes, sir. Yes.
But till now, we have only written prime cost. So therefore, I am writing words against this. Prime cost of goods transferred. Prime cost of goods transferred. Further. Then, please do remember, those guys are not told there is no factory overheads. There is factory overheads. It is given to you. It will not go inside your WIP stock because stocks in process are to be valued at prime cost. Now, WIP stock is over, no? Factory overheads will not be written up. It will be written down. Okay, it is still an expense, no? So, therefore, you write down 2 factory overheads. Now, WIP stock is valued, no? Now, you can write down your factory overheads. So, factory overheads in this particular case, 10,500. Obviously, this is also an expense only. No profit of our own company can be. You are incurring this here. If you want to write down any words, not compulsory, but then you will write down this is factory cost of goods transferred. $40,500. That's it. Every cost is written. Maximum factories can be incurring 4 costs here. Material, labor, direct expense and factory overheads. Everything has been written. So therefore, let's transfer now. Whenever you will transfer, you will charge your profit no in middle. So therefore, write down to costing P&L account. Okay. So some says whenever P1 will transfer to P2, it will charge a markup of 1/4 of transfer price. 1/4 of transfer price is 1/3 of cost. So therefore, 1/4 of transfer price, 1/3 of cost. Okay. Take 40,500 and do 1/3, please. 13,500. Now listen. Let me complete, then you will write. 13,500, I will be adding to this first. Okay. So that I can try to arrive at transfer price of 54,000. First department's cost is 40,500. It will charge 1/3 of that thing as its profit. So therefore, it will transfer at 54. And can we say 13,500 is a profit earned by some department, no, in middle. So therefore, I'm going to be writing 13,500 over here. Okay. So therefore, this 13,500 and over here nothing. So therefore, this figure is 40,500. This will be by process 2 account. Write down this, please. What? It is 1/3 of this figure. It will come over here, it will come over here so that you can arrive at the transfer price and it is a profit earned by some department. It will come over here in this column and come over here. That's it. Then you just do the totals. Now see. So first department's cost is 40,500. Now our departments are no longer cost centers. They are profit centers. Whenever one department will transfer something to the next department, it will be making some damn profit here. Okay. This is a profit. Once you add it, this is the amount that P1 charges to P2 and this is profit earned by some department in middle. So therefore, we wrote that in this particular column also. Then I've just added all the things as such. Okay. My P1 is completely done. Now, one thing I am doing, you all are not doing. Okay. When I'll tell you, you all can try to be doing that. At the end of this entire question, no, I can be asked, make a costing P&L account, although it is not compulsory. Okay. But still, costing P&L account. Costing P&L account obviously is a P&L account of the entire company, boss. Okay, entire company. So, profit of the company will be sum of the profits of the departments. Tell me, department 1 has made how much amount of profit till now? 13,500. So, therefore, I should be writing over here by process 1. So, therefore, this is 13,500. Okay. That's it. One other thing. I will also be asked that let's try to do stock valuation of the entire company. So therefore, I want balance sheet of the company. Balance sheet of the company, balance sheet of the company, balance sheet of the company. Listen, obviously on asset side, there will be stocks and obviously somewhere or the other, there will be WIP stocks also. Now, I asked process 1 manager, what is your amount of stock? He told me my closing stock is 3,700. Okay. Now you all know this thing. Directly just answer. Is 3,700 at cost to process 1?
Yes, sir. Yes, sir.
Yes. This answer will always be yes. Okay. Tell me, is it at cost to the company also?
Yes.
Yes. Because this is a first department. So I directly put this particular thing outside. Okay. These two things you're not doing. We are going to be seeing that towards the end as such. Okay. But I'm just keeping because process 1 is altogether over. Okay. So, process 1 is altogether over. Let's start it off with process 2 now. Okay. Now, process 2 obviously we'll start away with the opening stock. So, write down 2 opening stock. Now, process 2. Opening stock in this particular case is 9,000. Out of that, now, first let's write down this 9,000 rupees. So, therefore, 9,000. Tell me, in any case, 9,000 should have stock reserve, no? Inside it.
Yes, sir.
And that sum only has to tell me, yaar. Okay, so therefore, out of 9,000, in 9,000, how much was inter-process profit? That was 1,500. So, therefore, I write down that 1,500 over here. Cost to the company will be 7,500. Done. Now see, tell you one thing, output of process 1 is
Input of process 2.
input means raw material cost. First lecture I have been saying that particular thing. So obviously one transfer entry that we have always done, we are going to be doing that now also. So therefore you write down over here to material. Sorry. You all write down to process 1. In bracket, you all write down material. 40,500, 13,500, 54,000. Further, obviously, process 2 will incur material, will incur labor. So, material cost. 15,750, 11,250. Do remember, these are the costs that process 2 are incurring. In that, obviously, there is no profit of any department. Boss, you are purchasing materials from the market, okay? How can it have profit of our company only? We are purchasing from outside. So, obviously, dash 15,750. 11,250. Factory overheads we will not write down now. We will write down that particular thing after some time. Total it up, please. $75,000. 75, 15,000, 90,000. Now see, now you will understand why I prepared this profit column, because no, in first process, this profit column was technically of no use to me because in any case there were no profits over here, okay, because that was the first process. But from second process onwards, I'll be having good use of this. So write down over here by closing stock. Now closing stock 4,500. Closing stock 4,500. Now see, just tell me yes or no. Will closing stock of 4,500 have any profits of our own departments only? Yes or no?
Yes, sir.
Yes. I did not want to make any working notes for calculation of that. That's why I've made these two extra columns that will help me at this particular stage. So see, out of 90,000 rupees of cost of process 2, 15,000 rupees is a profit earned by our company only, our department only. Technically, you tell me this 15,000 would have been earned by which particular department, beta?
Process 1.
Process 1. And out of that, 13,500 is earned in this particular period only, and 1,500 must have been earned in the previous period. Did you understand my words?
Yes, sir.
Okay. So now, just find out of 90,000, our departments only earned 15,000 of profit. Out of 90, only 4,500 is not complete. So how much profit will be there in that? So I'm cross multiplying. Put an asterisk over here. Put an asterisk over here. 4,500 into 15,000 divided by 90,000. Just cross multiplying and nothing else. 750. $4,500 minus 750. So cost to the company will be 3,750. This will be prime cost of goods transferred. 71,250, 14,250, 85,500. Further, 2 factory overheads. Factory overheads in this particular case will be 4,500. Obviously, that is an expense that does not include profit of any other department. This will give you factory cost of goods transferred. So total it up, please. 75,750, 14,250, 90,000. Now, time for process 2 to transfer the goods to, speak the next word.
Process 3.
Process 3.
Process 3. My uncle doesn't have process 3 in this question. Speak the correct word, please. Finished goods. Okay. So therefore, let's transfer to finished goods. But whenever P2 will transfer to finished goods, it will charge its profit also. So therefore, to costing P&L account. Leave one line. This will give you by finished goods. Now see, I'll come to know how much you understand. Okay, I'll come to know that. So whenever P2 will transfer to finished goods, it will charge 20% profit on transfer price. 20% profit on transfer price is nothing but, you all write down the same thing once more. 1/5 of TP / 1/4 of cost. Might sound stupid, but I want you all to get me the profit. You compute profit like this. You tell me the profit, please. Compute, no? Slightly faster. Okay. So, you all have given me 2 or 3 different answers. Everybody speak their answer once. Shout. Okay. What should be the answer?
22,500.
Okay. You tell me one thing. 1/4 of cost, no? Cost should be 75,750 or 90,000?
75,750.
No. Obviously, in the last question, no, in process 1, I could not have asked you that. So, I did not even bother you all, because that time both these numbers were same, because that was the first process. Now, everybody think for 10 seconds more. P2 department will transfer the goods to finished goods at 1/4 of its cost. Last time I'm asking, you are going to be doing 1/4 of which figure? 75,750 or 90,000?
75,750.
Obviously 90,000. If I'll ever ask you, what is cost of P2? Is it 75,750 or 90,000? What is cost of P2? P2. 90,000. Beta, this is 75,750 is the cost of the company. No. If that is not okay to anybody, you all tell me, P1 had transferred the goods to P2. Tell me, what is cost of P2? Is it 40,500 or 54,000? What is cost of P2?
54,000.
54,000. This represents its cost. No, everybody will transfer the goods to the next department at their cost, na yaar. Okay, their cost is nothing but 90,000. You all will understand. P2 is not concerned with this, no. This I have only prepared, so therefore I need not make working notes for this. But obviously the cost of P2 is nothing but 90,000. So just do one small thing. Take an arrow from here, from cost, and put that arrow over here. This is the cost. 90,000 into 1/4, 22,500. And put that 22,500 in the profit column also. 75,750, 36,750, 112,500. Okay. Is it all okay till now? Any doubts till now?
No, sir.
Okay. So I am trying to be concluding few things which you are not doing right now. You all are not doing right now. Listen. I have to be making both these things also. When P1 transferred the goods to P2, it earned this much profit. Tell me, just now we wrote that. When P2 transferred the goods to finished goods department, how much profit did it earn? 22,500. That is this particular figure that you all calculated right now. So therefore, this is a profit. Okay. Meanwhile, if you all remember, closing stock reserves will come on the debit side, no? So therefore, this is closing stock reserve. Tell me, in the closing stock of process 2, how much was the profit trapped?
750.
750. So therefore, that particular figure will be coming over here. Okay. Now, listen very carefully. If closing stock reserves will get debited, obviously opening stock reserves will get credited here. Okay. So therefore, come no yaar. Thank you. So, over here I am writing by opening stock reserve. Tell me, in opening stock of process 2, okay, so how much profit was there? 1,500. Okay, 1,500. Now, one other thing. I was a chief accountant of this company. I asked my process 2 manager, do you have stock? He says yes. I asked him how much. He says that my closing stock is 4,500. I say thank you. Tell me one thing, is 4,500 at cost to process 2? Yes or no?
Yes, sir.
Yes. This answer will always be yes only, right? Is it at cost to the company? Is it at cost to the company? No.
Sir.
Can you say 4,500 has 750 rupees of profit earned by some department?
Yes, sir.
So therefore, I am deducting my stock reserve. Okay, 750. If you remember our yesterday's session, in any case, your stock reserves have two effects, no? It gets reduced from here and it gets debited to costing P&L account. Is that fine?
Yes, sir.
Okay, I'm exactly doing that particular thing. In fact, I have made accounts in such a manner that I actually don't require both these numbers. I directly have even 3750 in my accounts, no?
Yes, sir.
Okay, but you do a presentation like this, so therefore you all will also remember that stock reserves, okay, will be having two effects. But this presentation we are going to be doing towards the end, not right now. Okay, let's proceed. Job done. So process 1 is done, process 2 is done. We are on to our last particular. Oh, yesterday you all did process 3. That's sorry. This third one was finished goods department. That's why you all replied like that. What stupid man I am. And I gave a sarcastic remark also. Your uncle put it. Write down. Finished goods account. There is no process 3 in this question. Now, so we all will start. Write down. To opening stock. Okay, so now process 3, no, finished goods. So finished goods opening stock in this particular case is 22,500. 22,500. Okay. Obviously, 22,500 will have huge profits here inside it. 8250. Subtract. 22,500 less 8250. 14,250. Further, write down to process 2. So, from my last account, 75,750, 36,750, 112,500. Total it up. 1,35,000, 45,000, 90,000. Further, by closing stock. Closing stock in the textbook is 11,250. But obviously 11,250 will also have profits here. Put an asterisk over here. And exactly the same thing. 11,250 into 45,000 divided by 1,35,000. Get me that number, please.
3,750.
How much?
3,750.
3,750. So please subtract. This will be 7,500. Now, if I want some words, you all will understand this. This much finished goods we made in this period. This much we had in the beginning. This much we had towards the end. Can you say remaining finished goods must have been sold, no?
Yes.
Okay. So therefore, let's call this particular thing as COGS. You can also call this particular thing as cost of sales also. There is no admin, general admin and S&D. If it was there, I would add it. Okay. So this is 82,500, 41,250, 123,750. Done. Now see, finished goods account is also over. Okay, just wait. I'm putting the transactions of this everywhere, wherever I think it is required. Opening stock reserves. Finished goods opening stock. Now I'm rubbing out this page also. I don't require this. Okay. So finished goods opening stock had 8250 of profit. So therefore 8250. Then closing stock reserve, that is the stock reserve in the closing stock that we calculated. This particular figure was how much? 3750. Okay. So therefore this particular figure is also done. Okay. So this is 9750. This is in this particular case how much? 4500. Okay. I'm just asking, any doubt till now? Any doubt till now?
No,
This I'm only completing for time pass. Okay, this I'm only completing for time pass. But one other thing also. Now balance sheet. Obviously in balance sheet finished goods stock will also be coming. I asked to my finished goods department manager, do you have closing stock? Obviously he'll be saying yes. I asked him how much. He says 11,250. So therefore finished goods stock is 11,250. Does it have profits inside it? Of how much? 3750. So therefore I will be reducing that. This is 7500. Okay. Job done. So some had asked me this last thing. Show stock valuation for balance sheet purpose. I have done that. Total of these three figures 3700 plus 3750 plus 7500 14,950. Okay. This is one thing. Further, it asked me also find out realized profit. Realized profit means a profit that the company has earned. Okay, whatever company will earn, that will be nothing but realized profit. So let me prepare a costing P&L account for that. Costing P&L account, everything is done. Two things remain. On debit side, you tell me what comes first. You all have done now that particular thing twice. What comes over here?
Cost of sales.
Cost of sales. And on credit side, what comes over here is by sales. Okay. So sales is given to me over here. This is 1,40,000. So therefore I am writing cost of sales. I calculated over here. Okay, that is nothing but 123,750. So therefore 123,750. Pick up your calcs. Get me the net profit of this company. Don't write anywhere. Just take your calcs and get me the answer. No, you are not writing it. Just get me the net profit on the debit side. This is nothing but realized profit. 57,500. Now ICA exactly gets 57,500 only. But they don't ever prepare a costing P&L account. Might be they don't know that. Okay. Because this is how correctly you all should be taught as such. Okay. But they all don't do that. Okay. They get the same answer. Okay. Just by writing one more thing in this account. What they all do, no? In finished goods account itself, no? What they all do? Listen very carefully. They write down over here by sales. Sales in this particular case is how much? 1,40,000. Okay. Pick up your calc. Get me the balancing figure over here. $16,250. This 16,250 they shift over here. 16,250. And then they total it up. So therefore, once they will total, obviously, this will be 82,500. This will be 57,500. This 57,500 is nothing but realized profit. Okay. If you all will start to realize, okay, I think if you start to think, okay, you'll start to realize whatever we all have done in the profit column, exactly the same thing I've done in costing P&L account, no?
Yes.
Think no. 16,250. That is represented by this minus this. Then if I'll start from beginning, you see your costing P&L account, 13,500 I wrote on the credit side. This I wrote on the credit side. After that, this I wrote on the debit side. This I wrote on the credit side. This I wrote on the credit side. This I wrote on the debit side. So whenever I added something, I put it on the credit side. Whenever I less something, I put it on the debit side. So ultimately your profit column is nothing actually but your costing P&L account only. You all understood this?
Yes.
So ICA, no, actually never ever, those guys have never ever prepared a costing P&L account. So I also actually don't want you all to prepare a costing P&L account, okay, in exams. Here just for one question, okay, because there are two questions like this, just for one question, we might prepare it. So therefore, like, you know, your accounting fundas will also be okay. That, like, you know, opening stock reserves get credited, the closing stock reserves get debited, but it is not to be made in exams. Okay, first you all do one thing, you complete this thing, whatever I have written towards the end. Write down all these particular things. Sorry.
We have written a 16,250 amount.
Yeah.
Beside that, we'll get profit.
Actually, there is nothing to be writing there, okay, because this part, no, actually doesn't come in finished goods account only. But I say just puts it, so therefore they don't have to prepare a costing P&L account. If you want, you can just write, abhi, well happen, no, where you will take this profit. Because in reality, this thing now will not go to costing P&L account, no. This is itself that final profit, okay. So, iske liye you might not write down the words. In case you want to be writing, you can just write down to profit. That is your call. But do remember, this is not your realized profit. Huh? Your realized profit is over here. Hence, I try not to be writing words for it, okay.
Okay.
That I'm showing. Wait. You all complete this. This is done?
Yes, sir.
Okay. Next, you all give the heading stock valuation for balance sheet. You all do that first. You all write down stock valuation for balance sheet. And copy down the balance sheet first, please. Is it done?
Yes, sir.
Okay, you write down the next line now. Realized profit is directly available, realized profit is directly available from finished goods account. That is 57,500. Realized profit is directly available from finished goods account. That is 57,500. Alternately, we can also prepare a costing P&L account. Alternately, we can also prepare a costing P&L account to find out the same. To find out the same. We can alternately prepare a costing P&L account to find out the same. You can make costing P&L account. No, in the next question, you are not going to be making it, please.
Done, sir.
Now listen. My job is done. Obviously, in the next question, you all are not going to be doing this, but I have only 2 questions like this. That is, next one is actually for homework, but you're going to be doing it. Just before that, listen. In this problem, processes get treated as a profit center instead of cost center. That I explained you all yesterday. One process transfer the goods to the next process at cost plus markup. So that is what we all did today also. If any goods are not sold or produced, it will have unrealized. If any goods are not sold, rest you all cut. If any goods are not sold, it will have unrealized profit or stock reserve. Fourth, first process has not purchased from any other process. Hence, its stock will not have stock reserve. You all are aware of that. We did not have also. Company's profit will be sum of the profits of each department, adjusting it for stock reserve. And that is what we all did in our costing P&L account also. Okay. Now, you are starting away with question number 10. Okay. Question number 10, it is written 42 minutes, but I'm going to be giving you all 35 minutes max. Only difference that is there in this particular question, instead of 2 processes, you all have 3 processes. Okay. That much time is more than enough. You target yourself that you have to finish off the question within that much amount of time. Ensure that it is done. One small thing. You have your final answers here. Plus or minus 2 or 3 rupees, it is all fine. And nobody will be preparing a costing P&L account. Okay. Because in any case, the profit you all get from your finished goods account also. Okay. So you all start 35 minutes start Right now, I don't think so there'll be any doubts as such. Okay. Wherever numbers are coming in decimals, you can round them off up to the nearest rupee. Do not write down the paisa and all, okay, in the amounts column. That is all fine. You round them off to the nearest rupee, and in end 2 or 3 rupees difference is all fine. Please don't ask me also. Okay. Your time starts now. You'll have got the answer.
Yes, sir.
Okay, stock reserve, I guess. Yeah. Stock reserve, I guess, in second process is 700 or 699 or something like that, correct?
Yes, sir.
And in the third process, it's how much? 40. You all can tell. 4043. And in finished goods?
9817.
9817. 2 minutes more, just finish off this, then we will continue this. If anybody does not get the answer, you can check up the complete answer on the website. I'll be not able to help you in that. Okay, where you have done mistake, that you all can try to check from the website, where all the homework section answers are there. Stock mostly has come to 44441 only, but that's okay. Time done. So now that particular question is altogether done. Okay.